Welcome to the Taxcast from the Tax Justice Network, with me, Naomi Fowler. Coming up later, they're behind so many of the big scandals, the offshore leaks and collapsed companies whose books they've been signing off on for years. Time for the big four accountancy firms to come out of the shadows.
What they're about is maximising their income. They're not about providing objective audits, which is really what society needs.
We talked to former tax inspector and veteran tax justice journalist Richard Brooks of The Private Eye about his new book just out, Bean Counters, The Triumph of the Accountants and How They Broke Capitalism. But first, here's a quick tax justice news roundup. Egypt has joined other nations by introducing a tax on digital giants like Google and Facebook. Those kinds of foreign companies operating in Egypt have until now largely avoided tax on the profits of digital advertising in the Egyptian market. The Egyptian government expects to raise extra tax revenue of around $56 million a year. Two interesting Brexit stories this month. The European Union's chief Brexit negotiator, Michel Barnier, has called on the UK to publish the real owners of trusts as a key part of its relationship after Brexit. That's an interesting one. And also the EU is investigating 48 UK businesses in the most extensive tax case ever from an EU authority before Britain formally leaves. Britain's subject to EU competition law until it's no longer a member. Investigators are looking into whether tax exemptions granted to those companies violated EU state aid rules. The Competition Commissioner has warned Britain that, quote, the EU would take a dim view of any UK plans to deviate from the EU's tough approach to state aid once it quits the bloc. In Italy, the new Deputy Prime Minister there is threatening to remove investigative journalist Roberto Saviano's police protection from the mafia, who his work has exposed over the years. You may remember that in Malta, 8 months before the murder of investigative journalist Daphne Caruana Galizia, governing MPs there argued for her not to be given police protection. A very worrying development. And finally, new documents show the chaos at offshore law firm Mossack Fonseca behind the scenes with their frantic communications trying to work out how exposed they were to lawsuits after the Panama Papers leak. Apparently 2 months after the initial leak, they still couldn't identify owners of more than 70% of 28,500 active companies in the British Virgin Islands and most of over 10,000 active shell companies in Panama. Those are the Tax Justice headlines. Time now for the Tax Justice Network's John Christensen's take on this month. OK, John, this month we're going to talk about a couple of very interesting events that have been going on in the United States, all the more appropriate because you're actually there at the moment. Let's start with President Trump, who's in a spot of bother again, because the New York State Attorney General's filed a lawsuit prosecuting over the Donald J. Trump Foundation and its directors. The foundation is accused, and the Trump family, of violating all sorts of different laws. Tell us a bit about what's going on there. Very interesting.
Yep, so greetings from Washington. The reason this matter has been picked up by the New York Attorney General is because the Trump Foundation is registered as a non-profit organization in that state. Now, what the investigation has been seeking to establish is whether Mr. Trump and other family members have used foundation money for purposes that might not be lawful. In the words of the New York State Attorney General, Barbara Underwood, has the foundation been little more than a checkbook for payments from Mr. Trump or his businesses to non-profits, regardless of their purpose or legality? So that's what the New York Attorney General has been asking. Now, I've been in New York State earlier this week, and I asked Jim Henry, a New York-based lawyer, for his take on this issue.
Well, essentially, foundations have obligations. They're not supposed to just go willy-nilly spending money on campaigns or on, purchases of footballs from famous football players. Like Trump spent $12,000 of foundation money on that. And so there's a civil lawsuit now that is actually going after the foundation, claiming that they've violated the fiduciary purposes of the foundation and the whole mission of the foundation, which was a charitable purpose. It's called foundation fraud. it is a violation of state law, and it could be subject to a criminal indictment if the behavior is extreme enough. And so there's pressure now to get the governor of New York, Andrew Cuomo, to actually allow his state attorney general to prosecute Trump criminally and the foundation criminally for these infringements, which are pretty egregious. There's a long list of cases of where there were expenditures that were just simply not within the foundation's purview. So, a lot of foundations are headquartered in Manhattan. This would probably open the door to looking at other foundations which have been exploding in use and abuse, but it would also set a precedent for this president to be actually held responsible for something by somebody.
Yeah, and there's a former attorney for the chief counsel of the IRS, the US tax authorities, and he specialised in non-profit organisations. He says if he was still at the IRS, based on the lawsuit that he's seen the details of, he says, and I'm quoting, "I would make a criminal referral on charges of tax evasion or false statements on a tax return, or both." As we know, Donald Trump's not very keen on showing us his tax returns, and this is not a straightforward prosecution, but there is a public duty, this guy believes, in going ahead with the prosecution.
Yes, I think that's correct. Some Trump supporters are trying to paint this as a partisan attack on the president, but the evidence suggests fairly blatant abuse of foundation money. For example, $258,000 were paid out to settle legal disputes relating to Trump's for-profit businesses. So that's clearly not charitable purpose. $25,000 was handed out as a political donation to support the re-election of a Republican Attorney General in Florida. $10,000 of foundation money was spent on a portrait of Donald J. Trump, which now hangs in the bar of a golf resort owned by the president. Now, all of these payments, and many more besides, should set red lights flashing about failure to follow even the most basic fiduciary obligations. But perhaps the most damaging piece of evidence to date suggests that during the 2016 presidential campaign, Trump's team appears to have distributed charitable money from the foundation in a bid to secure support from US Army veterans in the Iowa caucus. If that is the case, then this would appear to be pretty prima facie evidence of political misuse of charitable funds. Donald Trump has already tried to avoid prosecution by reimbursing some money to the foundation and by paying out some penalties. But this case has now been referred on to both the Internal Revenue Service and to the Federal Election Commission for possible action. 2 years ago, Trump promised to drain the swamp in Washington. Well, from where I'm sitting at the moment here in Washington, the swamp looks even swampier than ever.
Indeed. Another very surprising story in many ways from the United States again this month. Remember that Tax Haven USA is number 2 in the Financial Secrecy Index from the Tax Justice Network, the jurisdiction of the most concern to us. And jurisdictions like Delaware are notorious for their secrecy services that they offer and their lack of record keeping. It's famously easier to form an anonymous company in the United States than to get a library card. Well, what happened was that politicians actually did get moving on an anti-money laundering bill, which seemed quite promising because among the proposals was a public register of the real owners of companies, something which has for a while now had the backing of most of the banks actually in the States because it simplifies things for them. The surprising thing is that Delaware's Secretary of State, Delaware of all places, the top official who oversees company formation in Delaware, publicly endorsed this bipartisan or cross-party amendment that requires companies to disclose their true owners at the point of formation. Amazing.
Amazing. Now, as it happens, I'm heading to Delaware tomorrow. Whilst I'm there, I'll check to see whether the leopard truly has changed its spots. Now, why did Delaware, which is a well-known secrecy jurisdiction, come out in favour of transparency? By now, virtually everyone recognises that the United States ranks amongst the world's top secrecy jurisdictions. Virtually every state in the Union allows residents and non-residents to create limited liability companies and trusts, which can be used as pass-through vehicles for tax avoidance purposes. 8 states, and that includes Delaware, plus Wyoming and New Mexico and others, allow companies to be formed without any requirement that the real owners disclose their identity. Some states even allow companies to be owned by foreign entities, i.e. companies and trusts, which makes it even harder to identify the ultimate beneficial owner. Now, for decades, it's been recognized that this lack of transparency of ownership makes it hard for law enforcement agencies and tax authorities to actually do their jobs, because it has become far too easy for the crooks to hide behind shell companies. Now, since 2017, the issue of beneficial ownership registration has been reframed here in the United States as an anti-terror finance measure. And that flips the whole debate into the arena of national security. And that explains, I think, why the proposed bill has attracted some support from among Republican ranks in the Senate. And that might give a hint as to why Delaware is taking this action. They don't want to be seen to be supporting criminal financing, which might actually pose a national security risk. As you say, Delaware Secretary of State Jeffrey Bullock issued a statement just a couple of weeks ago in which he endorsed a bipartisan federal proposal to require that companies disclose the true identity of the beneficial owners at the time of formation. Note that it's at the time of formation because identities do change, and maybe there's some wriggle room there because as company shares are traded, then the owners obviously change as well. And it's crucial, it's not just at the time of formation, it's also as the company continues in business.
Yes, it looks like Delaware's Secretary of State saw which way the wind was blowing with this proposal being debated, and he may have sort of thought, well, it's better to get in there and help shape this legislation if it's going to pass. And I think he was quite keen on making sure that it wouldn't be Delaware that would be collecting and storing the information, and that it would be something that would be applied nationwide in all states, so that not one state had an advantage over another. And in any case, Delaware as a state, perhaps under-resourced and got no sort of protocols with law enforcement, no pre-existing relationships, not really set up to take this information. So perhaps he was motivated in that direction. Unfortunately, with this bill, as our friends the Fact Coalition tell us, the most important provision in the entire package was this beneficial ownership transparency, and it's been dropped. There are several other aspects of the bill which are extremely disappointing, so a great opportunity missed in the United States this month.
Yep, absolutely a great opportunity missed. Has Delaware truly joined the ranks of the angels? Almost certainly not. I mean, of course, Delaware has the biggest company registry of all states. It's absolutely enormous. I think that the Secretary of State will have written that letter expecting that the amendment would go through or the bill would be withdrawn or whatever. Even before the amendments were proposed, the bill still contained loopholes relating to US real estate ownership, which would still have allowed non-resident aliens who wanted to invest anonymously in the US to continue to do so. Now, all of this has become somewhat hypothetical. The bill didn't go through the House of Representatives. Resident and non-residents can still continue to use US shell companies to hide their identity, and the US is set to remain in the ranks of the largest and least cooperative secrecy jurisdictions in the world.
John Christensen of the Tax Justice Network. Now it's time for the Taxcast special feature. We've had leak after leak, whistleblower after whistleblower, but no matter what the scandal is, when it comes to financial secrecy and tax dodging, the so-called Big Four accountancy firms, repeatedly involved, always seem to manage to stay in the shadows. That's Ernst & Young, Deloitte, PricewaterhouseCoopers and KPMG. This month, on the Taxcast, we talked to former tax inspector and veteran tax justice journalist Richard Brooks of The Private Eye about his new book, just out, Bean Counters, The Triumph of the Accountants and How They Broke Capitalism.
I started off thinking about a book on accountancy quite a long time ago, actually, because whenever I was covering stories for Private Eye, there was always an accountant lurking in the background who was either helping the scandal along or failing to uncover it, failing to expose it. In almost any area of financial crime, tax avoidance, money laundering, all that kind of thing, you could see accountants not doing what they were supposed to be doing. And that's when I started to think, well, maybe the story of these people should be told.
Right. What's surprising to me sometimes is how do the wheels keep turning, given the absolute disasters that we've been seeing, especially recently, have been exposed in terms of disastrous audits that were really worthless. How do things keep going?
Yeah. Well, the interesting story that I tried to tell in the book is that these aren't just recent catastrophes. If you go right back to, Renaissance Italy, you find accounting scandals, and you could see that story being repeated throughout history, right up to the present day. Firstly, it's not new, and it's probably becoming more frequent. Most people will remember the Enron scandal, the WorldCom scandal. There were a whole series of false accounting issues back around the turn of the 21st century. They weren't properly addressed. There wasn't adequate reform then. Then you had the banking crisis, which was only a few years later. That was largely down to false accounting. It started with companies in the US making billions of dollars worth of ridiculous subprime loans. The accountants, KPMG in that case, audited all the major subprime lenders, should have picked up on it. Some people did, short sellers picked up on it, and it wasn't that difficult. But they didn't, they just waved it all through. And then they did the same thing when those subprime loans became all kinds of weird and wonderful financial products, collateralized debt obligations, all that kind of thing. When they started filling banks' balance sheets and banks started coming up with crazy ways of hiding all that, again, the auditors kind of turned a blind eye or went along with it. They were making lots of money in the meantime in consultancy services on that very business, helping package up those products, for example. So they went along with it, and we haven't learned the lessons of that. The reforms have been completely inadequate, as the latest round of scandals show. Each time you think, okay, maybe it'll happen this time, but it doesn't. But the Big Four are incredibly effective at lobbying. They're very well connected. When, after the financial crisis, the European Union proposed some fairly severe changes to the auditing profession, they sent scores of lobbyists over there and got it all blocked. So the problem wasn't addressed after the financial crisis.
No, indeed. And if we look at a very current example of a major scandal, we've got the World Cup on at the moment. But something a lot of people may not know is that KPMG is quite heavily implicated in the corruption of football.
Yeah, well, the corruption of football has been well exposed over the last few years. When I looked back at the history of that, back into the 80s, when FIFA was setting up its marketing contracts, KPMG was at the heart of that. It was involved in setting up structures through which a sports marketing company that's now bust would pay FIFA officials bribes. The firm knew this was going on right from the start. Questionable whether those setups were actually illegal under Swiss law at the time. They might have been. This was where they were kind of playing very close to the edge, but they knew what was going on. And as I looked into more recent history, in the 21st century, again you could see that KPMG knew what was going on, but turned a blind eye. In fact, more than turned a blind eye, it agreed with FIFA that it wouldn't look at certain parts of what it was doing. It wouldn't look at the president's budget. So this was just abject failure to do the job. Yet every year it signed FIFA's accounts saying that, they gave a true and fair view. It said that it had adequate financial controls in place. It knew full well it didn't. But its auditors were going to World Cups. They were sitting in the directors' boxes watching the best games. So they were fatally conflicted. And the result is that the corruption was allowed to fester for years and years and years. That's why the World Cup's now in Russia and why it'll be in Qatar in 4 years' time. A lot of it is down to accounting or failing to account.
The Big Four are prolific users of tax havens as well, right?
Yeah, we know that tax havens are good business for the Big Four accountancy firms. In one way, that's to be expected, because if a lot of money goes through those places, then in fact it's right that the Big Four accountancy firms should be auditing some of the structures and so on that are set up there. That's really their job. But they also do a lot more. We've seen through stories like the Panama Papers, the Paradise Papers, that the Big Four are introducing clients to their tax haven offices to set up VAT avoidance schemes. So they're deeply in there, and they're capitalising on this whole offshore world. And if you look at other recent scandals like the LuxLeaks major corporate tax avoidance stories, they are effectively helping some of these places like Luxembourg to set up their tax systems so that they can bring multinational clients in there to reduce their tax bills back home. So in a way, the Big Four are driving the tax avoidance industry, much of it through these offshore centres.
And you make the point that tax havens come in pretty handy for the Big Four's own business affairs too, don't they?
Yeah, tax havens allow the Big Four to be very secretive about their own affairs. So you find the US arms, the biggest parts of the Big Four, are registered in Delaware and don't have to publish accounts, so we don't know what profits they make. We can have a guess. They're pretty big, but we don't know what a lot of their legal risks are, what their related party transactions, all these kind of issues that we ought to know about. In fact, one of the weirder aspects that I found looking at where the Big Four are and how they're structured was that they place a lot of their intangible assets in tax haven companies. So, for example, EY, what was Ernst & Young, owns all its brand names, marketing slogans, things like, the better the question, the better the well answer, or something like that. It owns all that through the Bahamas. Now, they won't tell me why, but there's a reason. There must be a reason. You don't park your slogans in the Bahamas, for the fun of it. So they deliberately remove themselves from ordinary or the highest standards of scrutiny. That seems to me the big point, that they're putting various parts of their business in various places where the spotlight won't be shone on them.
Right, and they've always chosen not to be a public company as well, for similar reasons, I would imagine. Yeah,
well, the Big Four are very adept at creating legal structures for themselves, which give them everything they want. So in the US and in the UK, they operate largely as limited liability partnerships, which, as the name suggests, allows the partners to limit their liability when something goes wrong. Each partner can only be sued to the extent that he puts money in, so his house is safe, which encourages the whole firm to take much greater risks. But that structure also allows them to operate as a partnership, not a company, not a limited company, and thereby keep advantageous tax treatment, because these senior partners or the partners don't want to be directors and have to pay national insurance and all the rest of it. They want to be partners. So the accountants have become very good, certainly over the last 30 or 40 years, at having their cake and eating it, moulding the world to suit them so that they relinquish liability and open up commercial opportunity as much as possible.
Another thing that's really interesting is the way that they like to use the language of tough competition in the tough marketplace and all that kind of thing. And when you actually look at the type of ways that they're operating, the fact that there's only 4 of them, they're not actually operating in a tough competitive marketplace that they like to project themselves as doing.
No, there's nothing. There is an entirely captive market because for companies of any size, there's a legal requirement for an audit. Therefore, they have a state-guaranteed market. There are only 4 of them capable of doing the audits for companies of any significant companies. In fact, the 5th largest, Grant Thornton, recently said that it couldn't compete for audits of the FTSE 350. So, the Big Four really do have it completely sewn up. Of course, they then complain that there's competition, but if you look at what that competition amounts to, it's just a very occasional shifting of a couple of deck chairs. I heard one senior partner of Big Four saying that there was one company every month in the FTSE 350 was changing auditors. Well, if you do the maths, right, that suggests an average tenure of auditing of over 30 years. And the figures bear that out. So there isn't any real competition. And even if you do lose an audit, you get another one. And one of the big problems is that the competition is even less than 4 firms, because quite often when a major company's audit contract comes up, there'll be reasons, conflict of interest reasons, that 1 or 2 of the other firms can't do it. Or it may be that it's in a sector where there are only a couple of the Big Four have any real expertise. And you end up with actually no competition. It has to be one particular audit firm. There's simply no choice. So competition is absent. And it also then means that a complacency seeps in to auditing and a lack of investment in auditing. Auditing just becomes the sort of bedrock, the cash flow that allows them to get into all kinds of other consultancy services.
Right, because that's a huge expanding area for them as well. It's not just accountancy, is it?
Yeah, so they come under no pressure at all to improve their audit performance. I found it interesting when I put together some of the figures for the book that even after the financial crisis, which was a low point for the Big Four, they really were complicit in that. They didn't increase their activity in auditing at all. Their share of income from auditing fell dramatically. In fact, I think in real terms, they started to earn less from audit income, and at the same time as expanding dramatically what they earned in consultancy income. They bought up a lot of smaller consultancy firms to try to move into digital, tech, all that kind of new world stuff. This is where the Big Four accountancy firms are going. That's what they're keen to protect. And I think they're trying to shepherd the authorities into the option that says they break them up into smaller firms, but still firms that do everything.
So that's not going to work?
That's not going to work, no. You had more firms back in the 80s, 90s, but you still got problems. You still had terrible accounting scandals, particularly in the 1990s. So it's not, I don't think competition is the big problem. And even if it were, 6, 7, 8 still isn't that many. I think the real problem is the nature of accountancy firms. It's the fact that they're not accountancy firms anymore. They call themselves professional services firms. Some might call them unprofessional services firms. But it shows that what they're about is maximising their income. They're not about providing objective audits, which is really what society needs.
How do you go about getting objective audits then? I mean, enforcement must be one aspect, because, presumably if you do, there are accounts that are fraudulent and you sign them off, there must be consequences in theory. Yeah,
you need, firstly, you need much better auditing, and then you need serious consequences for poor auditing. And the problem at the moment, you don't really have either. I think that for the most important companies, that the systemically important companies, private auditing doesn't work. I think profit-motivated auditing doesn't work for a bank, say. I think that needs to be a public service. So we need a new body, part of a bigger regulatory structure that audits the banks, at least. We saw in the financial crisis that the auditing of banks and the regulation of banks are intimately connected. That connection broke down in the years leading up to the crisis. And that was one of the major causes of the crisis. So those kind of things need to be coordinated better. I think that means bringing auditing of banks into the public sector. It can then be accountable democratically. I think we've seen, for example, in tax administration, that democratic accountability does work. It does improve tax administration. I think that can work for auditing too. So that's the very top end. I think then for other companies, auditing should not be combined at all with consultancy. I think the conflict is too great, and it's not just when the auditing and the consultancy is for the same client. It's a conflict created by the fact that the firms have become more consultancy firms than auditing firms. That kind of firm doesn't want to point out flaws in the model because they're benefiting from those models. And that's when auditing is so important, when it's looking at questions that go often beyond one company. They go to how a type of business is operating. So with the banks, for example, there were a whole raft of banks making unviable loans, putting toxic financial products on their balance sheet. The auditing profession needed to stand up to that model and say there are serious flaws in that. It's very slow, but there is little by little more attention now on the Big Four and what they're doing, finally, don't you think? There is more scrutiny, And people are now talking about the Big Four more than they were. But it sort of never seems to get far enough up the political agenda for real meaningful change. The question is whether there is now some political interest in change. And yet again, you can see a sort of rearguard action from all those vested interests. I sense that they're particularly keen to protect this model of auditing and consultancy. You can hear already the arguments that actually doing all this consultancy improves the quality of audit, which I think is nonsense. I think the evidence shows it's nonsense. But they seem to be preparing themselves for some action. It seems clear that in the UK at least, there is an appetite. So they may be preparing for some sort of breakup. But there are ways of breaking them up. There are types of breakup that actually they wouldn't mind that much. If, for example, you broke up the Big Four into the Big Eight, it wouldn't really matter too much. You're just dividing up the clients a bit differently. You would still have this combination of auditing and consultancy, allowing them to carry on making the kind of income they do.
And accounting, good accounting, is absolutely fundamental to a functioning, healthy economy and democracy.
Yeah, without that, we wouldn't have business and industry as we know it. So accounting is not just some sort of add-on to business. It's at the heart of commerce and business and making it work properly. When it's abused, business doesn't work. And that's when you end up with major scandals.
You've been listening to Richard Brooks. His book, Bean Counters, The Triumph of the Accountants and How They Broke Capitalism, is published by Atlantic Books. Try to buy it from a bookseller that pays its taxes. That's it for now. Thanks for listening. We'll be back next month.